let's talk about the new kid on the block. RBL Bank, it listed and it was a fantastic listing. We're currently joined by Mr. Ahuja, the MD and CEO of the bank. Hi, Mr. Ahuja. Thanks so much, sir, for joining in today. So, for the first half of this year, your book has grown at a very, very good pace. Could you tell us for the second half of this year and going ahead as well, what kind of growth numbers are you working with and from which sector do you expect growth to come in?
First of all, good afternoon and happy to be on your channel. The first half growth is just a continuation of all the effort and the investments that we've been making across the franchise of the bank over the last 5.5 years. And we have, essentially in terms of our portfolio, we are extremely well diversified across the various segments. We are in the corporate segment, we are in the mid-market and SME space, we are in the, the retail lending space, but most importantly, something which is our strategic plank, that we are a very significant player in the financial inclusion space, which is lending to the lower income segments and also in the agri ecosystem. So if you see in terms of our business portfolio, we are extremely well diversified across the spectrum and frankly experiencing good growth across all segments. Some segments are growing faster. For instance, the non-wholesale segments, which includes retail lending and the financial inclusion space, are growing a little faster than the wholesale banking space. But on aggregates, we are experiencing so far 40% plus growth, which is what we also, in the last half year period, we were up 44% over last year, and I think that kind of growth sort of continues even as we talk.
Okay, Mr. Ahuja, just coming back to the fact that your credit growth has been extremely strong at over 40-odd%. Do you fear that maybe there could be some amount of chinks in the asset quality going forward simply because of the rapid growth that we've seen in your loan book?
No, I don't think so. In fact, our book is now 6 years almost. I mean, it has been seasoned over 6 years. And in the initial 3 or 4 years, we avoided some of the more, if I may say, riskier and sensitive segments of the economy. Let me give an example. Even in the corporate space, where the sector overall in the country is seeing some stress, we have completely stayed away from infra, from long-term project financing, from, construction, real estate, those sectors. So we've completely stayed away from them, and we've tried to be more of a working capital bank even in that corporate space. So that has allowed us to, sort of remain relatively, on the tighter side of, on the risk profile. And in the meanwhile, we have focused significantly, like I said, at the lower end of the pyramid, and building that portfolio, which actually, honestly has turned out to be a very high quality portfolio, and where we see recovery rates of more than 99.5%, which means the gross NPA there is less than 0.5%. And so fortunately, the way we have sequenced our, if I may say, business expansion over the years, we have only recently, a couple of years ago, started getting into the slightly higher risk categories of business, which is the retail lending space. Right. But there again, we have remained secured. So we've largely been doing secured products. So when I look at my entire portfolio and its sort of embedded diversification, I don't see the fact that our portfolio quality may worsen, and it will remain within so-called planned levels. And
what is that planned level,
the indication
sir?
That we have been indicating that we will remain somewhere around the 1.25% gross NPA mark. We have so far been performing better than that, but I keep saying that because as my retail portfolio grows, that has an inherent slightly higher, planned NPA sort of. So let's see how it pans out. So far we have remained always within our guidance, as far as that is concerned, and I hope that shall continue. But the 10-15 basis point scope one always keeps.
Right. Yeah. Mr. Ahuja, very quickly, before we let you go, you were telling us about, you're focusing on the low-income group as well, but the MFI business has become so competitive. So, how are you going to outwit competition? And secondly, also looking at a provision coverage ratio, that's improved from around 42% to around 50%. Is there an attempt to take that up to around 55-60% approximately?
No, so let me answer that one first. On the September 30th results that we declared, we were at 60%. Yeah, so we've already brought it to 60%. So let me answer that clearly. Yeah, and as far as our focus on the micro segments is concerned, look, we started investing in that business 5.5 years ago.
Okay.
And I think if you see the so-called ranking, and if you take the MFIs, if you take the small finance banks, and if you take even the larger banks that are there in the country, we are already in the top 5-6 in the country in terms of asset exposure. So I would say that, the tailwinds are behind those players who have an early lead in this space.
Correct.
And we are already doing well in this space.
We
continue to grow at more than 50% in that space.
Okay, all right, fair enough, Mr. Ahuja. We're going to leave it on that note. Thanks very much for joining in and speaking with us. Well, in fact, staying with RBL, remember that CNBC TV18 had caught up with Mr. Ramdev Agarwal, the joint MD of Motilal Oswal Financial Services, earlier in the week on the Morat trading session. Let's listen in to his views regarding RBL Bank, and we're going to take a break and be back.
We have bought a good chunk of Ratnakar Bank, RBL. Yes. We bought it in Anchor, we bought it in the IPO day, we bought it after the first quarter result. So it has been a very good experience. But just because the stock price has moved by 30-40 bucks, that doesn't mean that anything has happened. Sure. I think the journey is long. It is going to be a lot of hard work, and whether it matches up to the new private sector banks which we have seen, whether it is an HDFC, whether it is an IndusInd Bank, Kotak Bank. I think that's the hope and dream. Whether it works or not, only time will tell.